Hey traders, Jason from Leavitt Brothers. I hope you're well. Happy Sunday. Wall Street is mirroring Main Street. On Main Street, there are people doing incredibly well and others who are completely down and out. Wall Street is the same. There are some stocks doing very well and others that have fallen completely apart and can barely bounce. There's always been a gap between the best and the worst, but the gap seems to be widening and staying more consistent. With the best stocks always leading. There tends to be rotation where stocks lead and then they kind of fall back and other stocks take a leadership position. And right now it seems like the same stocks are just pressing forward and leading, while the same stocks that have fallen behind are just staying behind. So in this video, I'm going to highlight the difference between the Nasdaq, which is home to most of the market's high quality tech stocks, and the NYSE, which is home to a lot more energy, finance, real estate, and utilities. All right, so I'm going to look at the breadth of both of the exchanges to kind of highlight the difference between the two and what's going on. All right, so first of all, here is the Nasdaq and the NYSE. Okay, so for starters, you can see that they both generally did pretty well. December, January, February. A little bit of a divergence here, which was definitely notable. I noted it at the time. Okay, both of them fell hard, and then things have diverged from there. So the Nasdaq has rallied all the way back. You know, this is like 80%. It's recaptured about 80% of its loss. Meanwhile, the NYSE has only barely gotten back to the 50% level. Okay, big difference there. Big bounce for the Nasdaq. Decent bounce for the NYSE, but certainly not as big. And then if we zoom in on the current movement, get rid of some of these lines, you have higher highs and higher lows for the Nasdaq, and you have some lower highs and lower lows for the NYSE. Okay, so the Nasdaq bounced more and it has continued to move up. NYSE bounced a lot less and has now started to trend down. And if I point out one other thing, I'd say, you know, look at the Nasdaq well above its 50, whereas the NYSE is just basically riding its 50 down. It's basically right at its 50. So big difference between the two. All right, so let's get into some of the breadth indicators. Okay, here we have, this is the Nasdaq up top, 10-day 80 volume line down below. Without getting into too much of an explanation, I explain how I use these in the class that I created. You can access the class below this video. So what we have here is the Nasdaq moves up. We have the 10-day moving average of the NYSE of the Nasdaq 80 volume line. It hits a really high level and it stays up there for quite a long time. A divergence is forming now, which is fine. Divergence is at high level. High levels aren't too potent. It's only when they get down to when the second hump is closer to zero that they become more influential. But anyways, we have the 10-day of the 80 volume line has drifted down, but all it's done is rotated down towards zero, and now it's moving back up. Okay, it's pretty normal for when the market's doing well to get some oscillations above zero, dip below zero when the market corrects, and then recaptures zero and continues on. Here, we haven't even gone below zero yet. Okay, divergence is in place. We haven't even gone below zero. But if I compare this to the NYSE, okay, you can see that while the previous chart was able to get up to a higher, you know, a 52-week high and like maintain that level for several weeks, the NYSE 80 line was only able to kind of match its previous highs. Divergence formed, no big deal, but it not only rotated back down to zero, where the Nasdaq line only simply went back down to zero and then started to go back up. This line has not only gone below zero, but has gone below a level that you would consider to be like the bottom of the range that tends to hold the indicator when the market's doing well. So again, you get like oscillations above zero, and then during a correction you get a minor dip below, and then oscillations below zero, above zero, and then a minor dip below, and that continues on. This, we got a dip like below the range that you would expect it to go. So when you think about like the Nasdaq line getting up here and the NYSE didn't, the Nasdaq simply rotated down to zero while this went below zero. Not only below zero, but below a level that you would think it would hold. Huge difference between the two. Okay, and this is the NYSE AD line versus the Nasdaq 80 volume line. All right, so digging into these a little bit more, Nasdaq 80 volume line, NYSE AD line with Bollinger Bands. You can see the Nasdaq line just up, 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 new high. This is the cumulative line, new high pressing against its upper Bollinger Band. NYSE line got in the upper half of the Bollinger Band, has been trending up, which is good, okay, but certainly nowhere near the new high that the Nasdaq line was. Then we got a divergence here, and now last week it dropped below the center Bollinger line. So big difference between Nasdaq up, 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 pressing against that upper line, sitting at a new high, whereas the Nasdaq looks like it might be rolling over. We don't know yet. But certainly it's notable that it failed to make a new high here, and then it dropped below the line, dropped below its center line there. So big difference here. One more chart of this. This is the weekly chart. Okay, weekly chart, same Bollinger Bands. Pressed against, dipped below, and then pressed against, and is sitting at a high right at its upper band. The NYSE line dropped below, which is fine, tested the lower line, and then just last week it moved up to the center line and got rejected. So while the Nasdaq was full speed ahead up to new high, this entire bounce, okay, S&P has rallied like 700 to 800 points off its low, and the cumulative 80 line at the NYSE has only managed to get back to its center line and get rejected and move over, and roll over. So there's a massive difference between these two. All right, here is the 50-day moving average of the 80 line at the Nasdaq, 80 volume line to the Nasdaq, and the 50-day moving average of the NYSE 80 line. So similar, same data as the previous couple charts, but I'm using a 50-day moving average instead of a 10-day moving average or the cumulative line. It's just another way to look at it. Just want to point out again, Nasdaq at a new high, NYSE, all it did is get back to the zero line and get rejected. Okay, these curves tend to move together. If you pause the video and you just see like the general up down movement here, between the two, they generally move together. Little dip there, but they're within reason. Divergences tend to help us pinpoint some turning points, but they're generally within reason. They're the same on the way down, but that's when things completely diverged. We got a double bottom here, and then it's been up, up, up. We got a double bottom here, and it just starting right over here, the NYSE just did not recover. Okay, this one got back to zero. This one didn't even get close. This one continued on, while this one kind of based, and then this one continued on again, and this one only got back up to zero. So huge difference here, huge void space here between the two. Just to point out the difference in performance of stocks at the Nasdaq versus at the NYSE. Here's the Nasdaq new highs and the NYSE new highs. Okay, when the market does well, you tend to get oscillations above a pretty low level, like 25 here, 25 for both of them, approximately. And so, and you can see that they're pretty close. I mean, we got, high here, and we got a drift down there and kind of a drift down there, test, and then expansion. I mean, they generally move together. You can see all these highs match up there, but over the last month or so, the new highs at the Nasdaq have definitely expanded. I mean, a print of 120 is pretty good when you consider like the average here. These prints were in place when the market was doing incredibly well. So a print of 120 is pretty good. Obviously, regardless of the absolute print rate here, you can see that the line is expanding. It's getting better. Each one of the rallies is having more and more stocks hit new highs. Meanwhile, at the NYSE, it's just flat underneath a key level. Okay, so new highs are expanding little by little at the Nasdaq, but they're not expanding at the NYSE. All right, here is the 1 month high low at the Nasdaq 100. Okay, so the blue line here is the Nasdaq, and the line down here is the 1 month high low at the Nasdaq 100. So it's the stocks making new highs versus new lows on a 1 month basis. As you can see, it's been declining here, okay, which is notable. But the absolute number is decent for now. It's just 3.6. Okay, we had a couple weak days at the end of last week. okay, which continues to bring the average down, but overall it's not bad. Okay, it's still maintaining a high level, and it's definitely above zero. Okay, if I compare this, and this is the Nasdaq 100. This is the 1 month high low at the S&P 500. Okay, so this number down here is minus 63. So it's 3. It's a positive number for the Nasdaq 100 versus a relatively big negative number for the S&P 500. Now this is not percentage. These are absolute numbers. Okay, so there's 505 stocks at the S&P 500 versus 100 and something for the Nasdaq 100. So you can't really compare the numbers, but all 100 in whatever Nasdaq 100 stocks are going to be in the S&P 500. So the difference between 3 on the previous chart and this one of 63 is essentially the bottom 400 stocks at the S&P 500. Okay, so the top biggest quality stocks are holding up, doing well, while the ones just below that, you see a big drop in this indicator. Okay, so let's look at another one. This is Nasdaq 100 stocks, number of Nasdaq 100 stocks above their 20-day moving average. Okay, pretty simple bar to cross. Okay, when the market's trending up, you'd expect more and more stocks to get above their 20-day moving average. When the market corrects, some of the stocks are going to lose their 20-day moving average. So the blue line here is the Nasdaq 100. The line down here is the number of stocks. So we got a print. The absolute print here is pretty good. The trend is down, okay, with the Nasdaq moving up. So that's notable. It's a topic for another video, another day. But the print here is pretty good. About 62% of Nasdaq 100 stocks are above the 20-day moving average. Now let's compare that to the S&P 500, and it's only 42%. So it's like 60-something% versus 40-something%. So it's a big difference. Okay, and again, like all the Nasdaq 100 stocks are going to be in the S&P 500. So the bottom 400 stocks account for that 20% difference. 20% times 400 stocks. That's another another 80 stocks that are below their 20-day moving average. Okay, it's not a high bar to climb. The S&P has just simply moved sideways here, and yet less and less stocks, and you got less than half the stocks in the index are trading above their 20-day moving average. So big difference again. Okay, last chart. Just to highlight, this is going to be the percentage of Nasdaq 100 stocks above the 200 versus the percentage of Nasdaq stocks versus the 200. Okay, the reason I'm doing this is because there's not only a big difference between the Nasdaq and the NYSE, but there's also a big difference within the Nasdaq. So in the Nasdaq, you have 50% of stocks have gotten back up to their 200-day moving average. Okay, so half the stocks are above the 200, half the stocks are below. But within the Nas overall, there's a huge gap. It's only like, what's this number here? 34%. Okay, so while the top highest quality stocks have recovered with half above their 200, when you consider the entire Nasdaq, it's only 34%. Okay, big difference here. So I wanted to compare. Let's do a quick comparison. Back in late 2018, market fell hard. Okay, there were a couple stabs up where half the stocks were above their 200s, but there was a big void here. Okay, and then the market ended up heading south again. This is not the Nasdaq chart, but it's good enough. Same situation is appearing here. Okay, where half the highest quality stocks have gotten back above their 200, but among the entire exchange, there are a lot of stocks being left behind. So it's something to, the market is definitely being pulled higher by a smaller number of quality stocks. So the big question is, can this last? Okay, can we have a market where a small number of high quality growth stocks do incredibly well while so many others get left behind? Okay, can we have a bifurcated market like this? From a trading standpoint, we need to just follow the charts. Okay, trust them and be a slave to them. Play individual names and keep the thought in the back of your mind that things could change fast. Okay, those who are doing the best in this market, okay, the traders who are doing the best in the market are the ones that have been able to just turn their brains off and just trade their signals without engaging in debate about whether the market makes sense or not. All right, thanks for listening. You can follow my YouTube channel by clicking the red subscribe button. Come check us out at Leavitt Brothers, where we offer market analysis and trading ideas to the financial community. And also check out my mini masterclass in trading. It's free. There's a link below. All right, see you next time.